Let's get some perspective on the markets now. Joining us from Dublin, Ireland, Naeem Aslam, Chief Market Analyst at Ava Trade. Thanks for joining us today, Naeem. So, of course, we do know what the Fed is likely to do today, and of course the market is expecting the Fed to continue to support the US economy. But what type of tone do you think we're going to get from this monetary policy meeting?
Thanks for having me again, Samantha. Yes, you're correct. What's going to happen basically today is I think it's going to be more of a strategy session, and there will be no firework during the session. So Fed will stand pat, and the ghost of Halloween is not going to come today. So basically the reason that we are saying this is we had a flurry of data in the past few days, and all that data what showed was that there has been economic weakness in the country. Now, the two things that the Fed are looking at is basically the inflation and the unemployment. Both of these two figures, they are not coming where they exactly want it to be. But the important thing above everything is that last time in September, market was kind of thinking that there will be tapering, but that didn't happen, and they said we are not going to taper. So I think what we are seeing at the moment is what happened yesterday, that the greenback, there was a rally in the greenback happened. And that is just because purely for the reason that the traders, they do not want it to get caught on the wrong side of the market, because there was a surprise last time. Yeah. But even though there is going to be no surprise as far as I can see, because there's been no commentary after that. So we were pretty much expecting that the Fed would keep the taps running and there'll be no change in the policy.
Let's talk about the commodity market in light of this, because I mentioned the fact that gold is up 7% since October 15th. That's when investors started talking about this tapering delay. And we've seen across the board commodities benefit, perhaps oil to a lesser degree. But overall, loose monetary policy across the globe has benefited commodities as that alternative investment class. Do you think that commodities then will continue to strengthen into next year?
We would. What I'm projecting for gold, the target by the year end is nearly about 1,400. But the interesting thing is that gold has already priced in that there will be no tapering till end of this year at least, or maybe to the 2014 in March. So if there is any kind of a surprise by Fed, because what really important in this meeting is obviously we're not going to have any tapering, there's no question about it. But the tone of the meeting is going to be very important. If they are not that dovish, the gold, it would have an impact on gold, and gold will fall. The important level for us to keep an eye on gold is a 1,300 mark. If gold break 1,300 mark, then we could easily see gold going towards a $100 mark, or perhaps to a $1,000 mark. Yeah. But if the Fed does keep the taps running, the upside potential could be nearly 1,450.
Let's talk about Spain across the Atlantic there, because on the economic front today, data confirming that Spain has come out of this 2-year-long recession. We had a 0.1% rise in Q3 growth there. That, of course, quarter-on-quarter figure. The question is, though, will this continue? Because much of the growth is said to come from external factors. So, of course, the export side of the economy. Could the euro's strength right now put a brake on that?
Yes, I mean the euro where it is at the moment, it is not really good for peripheral economies. Spain wouldn't be one of them, but the Spanish finance minister has already said that the growth has already been impacted by this strength in the euro. But then the ECB governor member, he is saying that, look, we are not going to use any kind of a tool to make the euro be weaker. So they are comfortable where the euro is at the moment. And I would say that if there is no tapering, again going back to that thing, we would think that there could be euro potential of about 140 by the end of this year, and potentially 142 by March as well, which is again not really good for Spain itself. But another good thing that we wanted to talk about in relation to Spain is the flexibility that they have in relation to their fiscal target. So that would kind of help Spain to come out of this. They have already come out of this recession, but that would kind of help them to gain a little bit more momentum, because obviously austerity medicine, which has been designed by Eurozone's policymaker, is working, and that is the result that we have seen Spain coming out of a recession.